Good morning, everyone. How are you all today? I hope I am audible. Good morning, Tavisha. Just a sec, huh? So, in the last class, we basically introduced the financial accounting and we did the orientation first. And after that, we started our chapter number one, basically financial reporting. But before going into the financial accounting, what we did, we first of all, discuss what are the businesses, like what businesses are normally there, like type of businesses and like finance, sole trader, the company, and the partnership. We understood their nature, that what each represents and what each has benefits and limitations. So based on that, now today we will be majorly looking at the financial information and financial accounting, and we'll basically now dive into the financial accounting component. Oh, my video is not visible. Just a second, huh? Mm, in the meantime, what you do? Okay, I think we discussed this element. Just read this slide for the time being. I'll just start the class. Okay, I think now everything is working. Hmm. Mhm. Please read this slide. Okay. So what we were discussing yesterday, we went on basically discussing the sole trader. First of all, we started with the business. What is the business? Basically, the common type of business is basically to earn profit, selling at high and buying at less. Then we discussed on the sole trader, like sole trader has unlimited risk and they have the ultimate control. And then we went on discussing the partnership, that partnership when two or more people basically come together to do the business, they have the unlimited risk just like the sole trader. It's just that they are multiple people involved and they have defined role, they bring the capital, so financing is much easier than the sole trader. But then we went on discussing the limited liability. Though I have not discussed the capital structure point here. Capital structure is something a very important topic which we have a chapter to discuss. So what are shareholders and all these things, we'll be covering them in a bit. Okay, like mostly in the chapter number 11, but I'll cover the stakeholder point and then we'll touch the shareholder and the director piece. In the limited liability company, we discussed that there are separate legal entity and they have limited liability. This gives them the advantage, but this basically puts an onerous on them that they need to provide the financial information, and that would be provided by the financial department of the organization. And financial department of the organization, basically you and I mostly are working there as an ACCA, and we will be basically providing the financial information to stakeholder, the users of financial statement. Like in case of bank, because let's say if we have a limited liability and we have a separate legal entity, then bank would definitely be interested basically what are the assets of the company, how much liquidity company has. So that basically makes sense for them, so that next day if we provide them a loan, it doesn't become irrecoverable. So they are interested in knowing this. Now, this is the segment we basically start a financial accounting. We start discussing the financial statements. Financial position, balance sheet. Profit and loss, statement of financial profit and loss, SPL is basically P&L. Statement of cash flow, basically cash flow statement indicating where the cash is generating from. Statement of changes in equity is basically about the capital of the entity, like how the capital is moving. And then significant notes of disclosure. So let's discuss them one by one. And this is where our financial accounting piece starts. So this is the statement of financial position. So for you, let me just draw a statement of financial position, a balance sheet, how balance sheet basically looks like. Okay, so that we get a picture of the balance sheet. Now, first of all, before I, create a, basically start a, just a second, huh? Before I basically draw basically a balance sheet, how balance sheet looks, just read this line. Balance sheet is basically a statement showing the financial position. I hope it's not like yesterday. Yes. I hope this entire screen is visible, right? Yes. Yesterday we were facing this issue. Now it's fine. So balance sheet basically shows primarily shows the position. What is the position of business at a specific point? So please understand, I understand that many of you are aware, but for many, this would be a very important thing to notice. And in case you are not clear with this, that balance sheet is always as on a date. What does it mean? That what is your asset on a particular date? That is what balance sheet shows. What is your, position? How much liability you have? How much assets you have on a particular date? Let's say if I talk to, let's say, Mr. A, and Mr. A, let's say, has 10 crore when I met him in January. How this 10 crore consists? Basically 25 crore of house and 10 let's say 15 crore of loan. So his net assets were basically 10 crore at the date of January. What happened later? Let's say he paid off this loan, okay, and this 25 crore of property, it actually got appreciated. Market value of the property increased. So what happened? He paid off this loan, and let's say we met at December. Now this 15 crore loan is zero, and suddenly this property is 30 crore. So you can see at the end of the December, his net assets is now 30 crores rupees. So if I talk about the wealth or the net assets of Mr. A on the January date, as on the January date, let's say 31st January, his net assets were 10 crore, consisting of 25 crore assets and 15 crore liability. But now when I talk about December, okay, at December date, his net assets now is basically 30 crore as on December. Okay, so the net assets had changed basically from one point of time to another point of time. Let's say this is January 2021, and now instead of December, let's make it July 2024. Okay, 2024. So 3 years back, when I look at his net assets, it was this much, 10 crore. But now if I look after 3 years, his net assets is 30 crore. The most confusing part for student is that sometimes they believe that balance sheet is for 12 months. No, 12 month represents a movement. Let's say if I talk about movement between 10 crore to 30 crore, it's 20 crore, right? Movement between 10 crore and 30 crore is 20 crore, the difference between these two, right? So these movement I can show that, okay, this was at 3 year period. Okay, and if I divide 3 year by 20 crore, so it would come out to be, let's say, 6.67 crore, something like that, right, per year. So if I represent the 12-month movement, that would be 6.67 crore per year. But if I talk about the position, this would reflect the position and this would reflect the position. This would not reflect the moment. First of all, tell me, is this point clear about the balance sheet? That balance sheet shows a position, not a moment, right? Anybody who's confused about this, you have to be crystally clear. I would admit that I was at my intermediate level when I was in doing chartered accountancy, and then I realized that balance sheet shows a position, not a moment. Okay. Now, second, balance sheet has these components. One is asset, another one is liability, and another one is capital or equity. We will learn in next chapter that this is also called a equation, accounting equation. That total assets basically is equal to total capital or total liability. Don't worry, we'll just see this here. And there is some non-current assets and current assets. So let me just draw the financial position for you, and then we'll basically understand them one by one. Okay, just as I told you, the balance sheet is as on a day, so it will be as on a date of 31st December 2024. Normally, the cycle for balance sheet is basically year end. Year end. What is year end? It can be calendar year. Calendar year basically means Jan to December. Okay, many organization like international multinational companies follow this calendar year. So normally their year end would be 31st December. Many follow financial year. Now, what is financial year? In India, normally we follow April to March period. Like April, 1st April is the beginning and 31st March is the end of the year. So for many company, you might see that 31st March 2014 is the year end. Clear? That year end can depend whether company follows a calendar year, whether it follows a financial year. And sometimes in questions you might see that company's financial year is 30th September. So what it means? It means that company is following 1st October to 30th September period. Okay, it can happen. Many companies follow this period, and it can be July, June to July, like whatever period company is following, basically that will define their year end. Okay, so year will start from, let's say, January, will start from April, will start from October, and then it will end by after the 12-month period. Is this clear? Sharvi, can you tell me what piece you want to understand? Which part? This year end part or basically position part? Okay, please tell me till the moment. The position part. Okay. Okay. Just a second. So let me just, draw this. Let me just draw this balance sheet for you, and then we'll basically go into this. Next one is, yeah, I think I have already drawn it here. Okay. Okay. I'll just show you. Then I'll basically discuss the component. So how this basically things goes. First of all, when we talk about a balance sheet, okay, whenever we are talking about a balance sheet, we have to draw a balance sheet as on a date. So let's say I am talking about ABC Limited, XYZ Limited, let's say Harry Sole Trader, or let's say uh, A and B, A and B partnership. Okay. It can be basically balance sheet will start with and basically with the entity name, whether it's a limited company or basically a company, whether it's a sole trader or whether it's a partnership. First of all, it will start with the name. Then it will declare basically the period, the position. Let's say the period is as on 31st December 2024. Basically, it's saying that what is the position, what is the assets of the company as on a date, as on a date. So let's say if I drew, this would be like a basically a vertical shape. And what you would see that normally when we create a balance sheet, we first of all want to start with assets. It will be non-current assets. Let's say plant, machinery. What these are, we'll discuss, don't worry. Plant, machinery, then current assets, or let's say building, land. Then we have current assets. What are current assets? Cash, trade receivable. If you are not familiar with the trade receivable, The substitute word is debtors. However, we don't use debtors much. Trade receivable or debtors. Inventory, or let's say other assets. Other assets what? Let's say prepaid expense. Okay. This would basically, let's say this is 1 lakh. This is 2 lakh. This is 5 lakh. Okay. And let's make 50,000, 80,000, uh, let's say 70,000, and this is 10,000. What would be the total? 1, 2, 5. This basically makes it 8. And this is 120. Okay, this is 2. This is total 2, surprisingly. Okay, 2 plus 8, this is 10 lakh. Interesting. So you would see the first thing in the balance sheet as assets. What are assets? Basically, what you own. What you own. Let's say my property, my laptop, my system, my phone. These represents assets. Now it can be categorized as current or non-current. What is non-current? Basically any asset lasting for more than 12 months. Any asset not lasting more than 12 months basically will be current asset. Now, how do we categorize that? We'll go like many of you can question like cash can be basically with us for a longer period. What is trade receivable? What do you mean by inventory? So we'll discuss them in the upcoming chapter one by one. But this is the prima facie of the balance sheet, where first of all we shows how many assets, how much of worth of wealth we have. First of all, this is the prima facie look. Non-current assets, current assets. Then we move on to show that how these assets are financed. How these assets are financed. Okay, basically, where did the money come from to buy these assets? We have these assets, so let's show where this money has come from. So what we will do, actually this page is short, so what I will do, I'll just draw another one. Now just continuing above. Okay, we had 10 lakh as a total here. Okay, in the above for the assets. So let me just total assets. This was the total asset. Now what I would show you, like what is my equity? What equity is, and can anyone help me? Equity or capital? What is the capital? Like share capital. Okay. Profit for the year. I'll just make a total of here. Okay. Capital introduced and drawings. Okay. Money brought into the business is equity. Very good, Jivika. Ownership. Ownership can be of assets also, Ankit. The amount invested by the owner is called equity or capital. Who has said this? Sabrit. Yeah, that very good answer, Sabrit. Money brought in by the owner. Very good, Tavisha. The amount invested by proprietor in the business. So you're talking about sole proprietor. It can be also shareholder, Sharvi. Drawing is personal use or withdrawal for personal use. Very good, Divyam. So I understand that you guys are aware. So let's say we have 10 lakh of assets. So what I'll do, I'll make 4 lakh. 4 lakh as the capital. How will I use this? I'll use, let's say I had invested 3 lakh. I basically made a profit of 1,20,000, and this basically made profit of 120. I introduce a capital, let's say 50,000 in the year, and this basically made 470. So I also withdrew 70,000. So whatever money you introduce, whatever money you introduce is called capital. Let's say I want to start a business. I have 2 lakh rupees. So what this 2 lakh will represent, this 2 lakh will represent my capital. I have, let's say, a property and I want to do a business on that property. Okay, so that property will be my capital. That property will represent my capital as well as my asset. Okay, we'll understand this. Let's say we have cash available as a 2 lakh. So 2 lakh will represent as a bank balance in my asset, as well as this 2 lakh is basically my capital. Okay, this is what balance sheet shows you. Now, let's say if I have borrowed this 2 lakh, in that case, this would then come in the liability section, and liability section will have non-current liability Let's say borrowings. Borrowings basically means loan, either from bank or from any institution or any person. Okay. What else we have in the borrowings? Currently, let's go with the borrowings. They are multiple section, but will not introduce provisions and all then. Current liability. Okay, currently we have basically what will show? It will show borrowing or basically liability, and then we will have current liability. Let's say trade payable. Okay, in case you are not aware about trade payable, what trade payable is? Basically creditors. Okay, let's make this as step 4 plus 3. No, let's make it 4. Yeah, and you can also have a bank overdraft. I'm not sure if you are not aware. Bank provides you, just like you have cash with the bank, so bank also provides you some facility which is called overdraft. It's a temporary loan. It's a temporary loan. Okay, so you can have a bank overdraft. And what else? Just a second. You can have accrual expenses. Like we had prepaid, so we have, let's say, accrual or outstanding payable. Let's say we have money received in advance, money received in advance, or let's say we have yet to pay an bill outstanding bill of any electricity loan. Okay, so let's make the total. This is 448. Let's make trade payable 1 lakh, and bank overdraft, let's say 50,000, and then balance would be 50,000. Now if you see, this would also comes out to be 10 lakh. Balance sheet has this one thumb rule. When you create a balance sheet, you can understand the position is saying balance. Okay, though we call it statement of financial position, but it's also called balance sheet. Why it's called balance sheet? Because it balances, it matches. Please, can you explain why accrual a current liability? Basically, Gautam, let's say, though I have not discussed accrual, but just to let you know, let's say I have an outstanding bill. I have not paid my electricity bill. Electricity expense have incurred, but have not yet been paid. So it will be coming as accrual liability. Clear, Gautam? I'm assuming that you know accrual liability. Otherwise, don't worry. We are going to discuss accrual just after, accrual has a very specific chapter. So don't worry about it. Okay. So what I was saying, when we talk about balance sheet, please understand balance sheet at its word says it means balance, it matches. So your total assets, if I come back to this equation, it always says total asset will be equal to total capital and total liability. So whenever we talk balance sheet will always tally the total of the asset would match with the total of the capital and would match with the total of the liability. So ultimately the total of capital plus liability is equal to total assets. Now with this we can basically play around like this. Like I don't need to teach you equations, how equations work. Let's say if I have total assets of 10 lakh and I have total liability, let's say 8 lakh. Can you tell me what would be the total capital? Using the equation, total assets is equal to total capital plus, very good, you guys are answering it correctly before even me explaining, total liabilities. Very good, very good. Everybody has given correct answer. So anyone who's not clear, please tell me. This is very simple. I know many of you will be thinking what sir is teaching, what Vishal is teaching right now. But please understand, this is very basic. I don't want any confusion here. That's why I'm spending time. 2 lakh. Anyone, don't be shy. Don't be shy. This is your time to learn. If you are not clear, please learn. This is fundamental. I don't want you to carry this, an incorrect concept with your going forward in skill and professional level. This will be very problematic. Clear? Don't, in case still not, you're still shy, please reach out to me on WhatsApp in case you are uncomfortable in discussing here. Okay, no worries. So you can see that with this, we can play around with this equation. This is a called accounting equation. And can anyone tell me why it is always matching? Why it is always matching? One question I forgot to ask you previously. Why it is always matching? Very good, Jhalak. Yep, yep. Anyone else? Jhalak has given the answer. Jhalak, I would recommend to give me answer directly so that others read. So it would be, they would now either know or not know. They will basically repeat your answer. Total balances of assets and liabilities. Basically, you're talking about, Sujita, the equation. Darren, what is the difference between capital and capital interest? We'll discuss this in capital structure chapter. I'm just familiarizing you with all these things. Don't worry. I have not discussed what is accrual accounting. We have not discussed what is liability. We are just discussing balance sheet and overall, like how balance sheet is prepared. Okay, don't worry. This is our entire topic itself. Anyone can give me explanation? Hmm. Sajita and Jhalak has only given the answer. Well, I'm just waiting. Should I continue? Ankit has given in balance sheet, capital and liability are together and sheets are on the other side. Okay, I think you are getting what I'm trying to say. This is called duality concept. Duality concept. You guys are correct in saying basically this is a double entry system. Double entry system. But double entry system basically is originated from this duality concept. Actually, it will be too early. Let's first discuss SPL and cash flow statement. Let's first discuss those components, then we'll come back here because I'll start this discussing duality. So we'll without knowing, we'll starting chapter number 2. So let's just hold our horses for a moment. This is duality. Don't worry, we are just going to discuss duality. What this double entry system says that for every asset, there is a liability or equity. Okay, what it means is that for every debit there is a credit. We can also understand it from income statement. This is from balance sheet point of view. Let's understand from P&L point of view. For every income there is an increase in asset or reduced in liability. And similarly, for every expense there is an reduce in asset or increase in liability. Don't worry, I have not explained this. I'm just introducing you to the duality. We are going to discuss it in detail. So far, any question about balance sheet format, about how it is prepared? What is current, non-current? We are going to discuss in chapter number 2. So balance sheet matches total accounting equation, total asset is equal to total liability plus capital. Clear, everyone? Wish is saying if it's a double entry, what's the other side? Single entry. I'm didn't get your question clearly because what we are discussing is double entry. Single entry doesn't exist, Wish. Let's say, just to explain you, just a second, huh? Just to explain you. Let's say I have cash. Okay. I have cash. I have introduced the cash, let's say 10 lakh. I want to start a business. You will see that in your balance sheet, if I draw a balance sheet, so this cash would be showing here. This cash would be showing in your assets as a current asset, right? This cash would be showing as a current asset, 10 lakh. Now you would see what is the other side, right? This is your question, Vish, right? Please answer. This was your question. Yes. Now, what is the other side? As I told you, for every asset, because this is an asset, there will be a corresponding liability or equity. Since this cash was introduced by me, in the liability or equity side, equity and liability side, I will be having under equity a capital 10 lakh, because this was introduced by me. If it is not introduced by me, let's say I borrowed this money. If either I have the cash or I borrowed from somebody, in this case, this would be coming under liability. It would not be coming under the capital. Then it would be coming under the liability as borrowing. Let's say we borrow from bank, and this will be 10 lakh. So you can see total assets of 10 lakh will still match with the total liability and equity. So 10 lakh here, either with capital or with the borrowing. So you will have always two sides. Okay, Vish? One side is here, another side is here. Yeah, Gautam, the format that we follow the format of IFRS. So the IFRS basically ask that we start with non-current assets. We start with current assets basically. Non-current not basically starts with assets. IFRS is basically a standard which you will learn. One of the most important course of your life is IFRS. Those who are not aware what is IFRS, IFRS is International Financial Reporting Standard, and many of you will be getting expertise in IFRS. Basically, it represents the highest form of accounting, the best practice. If I talk about, what is this IFRS or, accounting standard, it represents the best practice of accounting. So as a ACCA, you guys are supposed to follow IFRS. What is IFRS? Okay, I think Janvi, your okay, let me just, remove this access from you. Maybe it has happened by mistake. Uh, the video, the option is not happening. Okay, I'll just check later on. No worry. Okay, no worries, Ankit. Many of you are new. Don't worry. This is the introduction class. This is knowledge level. You're gaining the knowledge. Don't worry. Those who are saying I'm new, sorry. Don't be sorry. Just be clear. Now, IFRS basically represents the best practice of accounting. So what IFRS says, it says that the best practices is always start with assets. When you want to discuss, basically, let's say if I want to talk about my wealth. So first of all, I'll be listing out the assets I have. Let's say my car, let's say my home. I will be listing out. Do you see any person, first of all, telling their loan? Okay, I have 10 crores of wealth. First of all, I have 15 crores of liability. And then I have basically 25 crores of assets. Doesn't make sense now, right? So it's always started with the non-current assets. Clear? Gautam, this was your question. Does the balance sheet always start? Okay, got it. Total capital equation, Ritika says. So total capital equation, let me just tell you. Ritika, first of all, tell me, are we clear that assets always matches with liability? Total assets is equal to total liability plus total capital. First of all, tell me, was this equation clear with the balance sheet? Ritika? Yes, because we have number of assets. Like if you are not comfortable, don't worry. We have total assets here as 10 lakh. And then how this 10 lakh was financed. See what accounting saying. As I told you, accounting is a business language. What it's saying, I have 10 lakh of assets. And how I have financed this. 4 lakh was my money and rest 6 lakh was basically money I borrowed from people. This 6 lakh is basically 4 lakh loan, 1 lakh basically credit for purchases I have made. We will learn, but this is basically showing the money I have borrowed. This is money I own. So for 10 lakh assets, I have basically used 4 lakh my money and 6 lakh basically the money of other people. This is basically the what business is saying. Clear? So this accounting equation, total assets, that I own 10 lakh assets, out of which 4 lakh is basically financed by me with my own money, and 6 lakh is basically from the people's money, the let's say bank, let's say any creditor. Clear, Ritika? Now, if let's say I say that I have total assets of let's say 15 crore, and I have used people money of let's say 9 crore. Now, Ritika, only you tell me how much would be the capital. Other people can answer me directly in my message. Ritika, please tell me. That basically will tell me whether you have understood the concept or not. Okay, shall we correct? Ritika, just think what I'm saying and just read what it's saying. Don't feel pressure. It's saying I have 15 crores of assets. Okay, out of which I have used 9 crore of other people money. Now, how much money I have used mine? How much is it of my money? Sajita, what is that answer? Yeah, sure. Take your time. Sajita, you have written 75. Where did 75 come? Sajita, are you not clear? I'm saying I have, let's say, property, my own building. Okay, building. I have a building of, let's say, 10 crore. I have, let's say, car, let's say 5 crore. My total assets is 15 crore. How did I, manage to buy this building and car? I used, borrowing. I used loan of 9 crore. Now, where is the rest money coming from? Now tell me, Ritika. Yeah, this is 6 crore. What this 6 crore represents, Ritika? The money that I used, money that belongs to me. Money that belongs to me. Clear, Ritika? And Sajita, were you clear? Or was it a mistyping? Right? Now, do we understand what balance sheet says? Balance sheet says that I have total worth of asset this much. And out of this, I have used this much of my money and this much of the other people's money. So, Sajita, are you clear now? Okay. It was basically, in case you are still not able to answer, it was 15 crore of assets, okay, 9 crore of liability, and then 6 crore of capital. Basically, I borrowed 9 crore. I basically use my own 6 crore, and for this, I created 15 crores of assets. And that's why it always match. Okay, 15 crore will always match with 15 crore. Clear, everyone? Don't worry, it's an introduction class. It's your fundamental that we are clearing. So many of you would be feeling like this is so basic, how can somebody make such a mistake? Just think like this, when it was your first time learning this, so you also basically struggle with it. So this is why, and I hope now you are able to read it better, everyone, that how this basically balance sheet and liability and capital is, what does they mean. Okay, that money that I have brought is my capital, money that I have borrowed from other people will be basically my liability, and this basically will show how much assets I own. Ankit, that is a very, out of the syllabus question. Management accounting, just to let you know, is basically about understanding the cost and basically doing some variance analysis and looking for the future. Financial information is about past, which we will learn over the course. Once you complete this course now, once you are through with this syllabus, I will ask you what is management accounting, and you will be able to answer it better. Okay, right now it is very initial period, so it will be saying that it is just a future accounting, or it is about analysis, decision making. Nothing will basically get into your head right now. Okay, so we'll learn, I'll ask you this question again after the end of the syllabus. Now, financial position, balance sheet, non-current assets, basically property, equipment, motor vehicle, and current assets, basically inventory. Let's say inventory could be mobile phone, laptop, let's say goods that you basically buy. What inventory represents, please understand, whenever we talk about inventory, it means the goods that you sell in business. Okay, let's say if I talk about Britannia company sells Parle-G biscuit. Okay, many of you are saying inventory is stock, but I hope we understand inventory means the goods that we trade. Let's say I'm a shirt company, I sell shirt, I'm in textile, so I sell shirts. So shirt will be my basically the inventory. Let's say I'm a mobile company, I'm an Apple company, I'm a, let's say, Samsung company, so I sell mobile, so mobile will be my inventory. Laptop, I sell laptop, laptop will be my basically inventory. Yeah, inventory includes raw material, finished goods. Okay, we'll learn. Raw material, work in progress, finished goods, inventory is there. Trade receivable. See, though we are discussing these components, we will be learning them over the chapters. Inventory is itself a chapter, trade receivable itself a chapter. So don't worry. Okay, Vishal has not cleared all the doubts. Don't worry. We have some chapters. Okay. The problem with the FA is that if we start discussing one thing, now there's no end to discuss. So as a teacher, I have to stop you at one by giving you this much of information. Just use this information to to just seduce your basically reduce your curiosity for a time being. We'll discuss them later. Prepayment, basically any payments made in advance. Let's say rent paid in advance. Rent paid in advance. How we will learn. Cash. uh Divyam saying stock is kind of stored things. Inventory is moving, mean it is outflow inflow. Yeah, we will learn, Divyam. We'll learn this. Owner's capital. What is owner's capital? Again, comprising the capital brought forward, profit for the year, capital introduced, and less drawing. Again, what it basically means, the money I have introduced. I have introduced. Okay. Liability, money I have borrowed from others. Okay, liability can be from bank loan. Bank loans are long term, basically more than 12 months. That's why it can be non-current liability. Current liability, basically trade payable, creditors that I have basically using a supplier. I have basically bought the goods. Trade payable are directly linked with your inventory. Okay, so for goods you have bought on credit, mostly they will represent trade payable. Accrual, we will learn. No, trade payable are not short-term loans. Or you are saying short-term loan will be coming under current liability. Trade payables are not short-term loans. Trade payables are short-term credit. Short-term credit. They are difference. Okay. You're saying short-term loans so will also come here. Yeah. Overdraft. Overdraft is a short-term loan. Overdraft is a short-term loan. Now, accruals, I was saying, accruals will be coming later on. Let's say outstanding bills. Okay. Tax payable. We'll learn all these things. Okay. So far we are through with the balance sheet. Okay, these components. Any doubt about them? If you want to ask me about inventory, if you want to ask me about trade receivable, don't worry, chapters are coming. All clear about the balance sheet? Balance sheet is as on a day accounting equation. Total asset is equal to total liability plus capital, right? No doubt. Okay, let's move on. Statement of profit and loss. Now we understood that balance sheet is as on a date, but statement in profit and loss and what is other comprehensive income, we'll just learn in a moment. That profit and loss is for a period. Okay, let's say 12 month. Mostly it's 12-month period. Let's say I have 10 crores of assets. 10 crores of assets. This represents my wealth. Okay, so this would be coming under balance sheet. But what if I tell you, using this 10 crore, I have generated, let's say this year, 2 crore rupees of profit. And then last year, I generated 1 crores of profit. How much I have performed, how much I have performed, okay, how much I have earned over a year. Let's say, just to give you a very simple example, I have a bank FD of 1 lakh. Okay, I invested 1 lakh in the bank. Now bank pays me, let's say 20,000 as interest. Okay, yearly. Every year, bank pay me 20,000 of interest income because I have deposited my money with the bank. So bank is basically paying me for that deposit, and that is interest. So each year bank is paying me a small amount. So this 20,000 year, like this will be my profit for this year. This will be my profit for this year. Let's say this was 2021, this was 2022. Okay, so profit and loss, unlike the balance sheet, is for the period. It doesn't represent my wealth. It represents how much I have earned or how much I have lost in a year. Clear? It can be prepared as a single statement or two statement, basically statement of profit and loss and statement of other comprehensive income. Statement of profit and loss represent basically, let's say you have made sales, you have made purchases, and this was your trading profit. And then you basically incurred salary, you basically incurred depreciation, you incurred rent expenses. All these expenses will basically comes out to be your net profit. Don't worry, I'll just show you the format of profit and loss. Yeah, balance sheet is as on a date, P&L is of a period. Balance sheet, statement of financial position, is as on a date. Statement of profit and loss, SPL, is for a period. First of all, tell me this period and the as on a date part is clear? Yes, yes, yes. Yeah, which basically which the P&L is the income statement. You're saying correct. Okay, what is the doubt, Vish? P&L is the income statement. Let me just show you. Okay. By showing the property, car, loan. Let's say I have this 25 crores of assets and I have this 10 crore of loan. This represents my wealth as 15 crore. This would be my balance sheet. Let's say if I want to show you right now we are at my. So if I want to tell you my wealth, so it would be 15 crore as on my, like I'm right now 30 years old. Okay, my age is 30. So based on that, I have 15 crores of wealth. Okay, doesn't matter in which year I have. Let's say when I was 15 years old, what wealth I have doesn't matter. What I am saying is today, as on today, the wealth that I own is 15 crore. If I talk about 2 years back, so it would be like when I was 28 years old. What is my wealth then? Let's say my wealth was only 10 crores. So when I'm talking about balance sheet, it represents as on a date. Okay. It doesn't represent what has been done in past, what is done in the last year, nothing. It only shows what is your position as on a date. Now, profit and loss. What profit and loss says? Let's say I have a 15 crore wealth. So what I will show that during the year, this was let's say 2024 December. Okay, December. I will show during the 2024 January to December, I earned 3 crore rupees. Let's say I made a sale of 10 crore, which I basically based on purchases of 5 crore. Okay, purchases. Okay, my profit was 5 gross profit. The trading profit was 5 crore. Then I basically incurred the marketing expenses, salary of my employee, rent of my office. All this basically cost me 3 crore. All this cost me, sorry, 2 crore. So my ultimate profit come out to be 3 crore. Now, if I look at it, my wealth basically increased by this 3 crore. So earlier at the start of the January, or let's say at the end of 2023, my wealth was 12 crore. My wealth was 12 crore, but I added 3 crore profit of the year, 3 crore profit of the year. So my wealth became 15 crore, which is representing here. So this 15 crore is December 2024. This 12 crore is December 2023. And this profit is for the period. Is it clear, everyone? That profit I made was for the period between Jan to December. My December 2023 wealth was 12 crore. Okay. And my December 2024 wealth was 15 crore. How my wealth increased from 12 crore to 15 crore? Because of the profit I made. I made a 3 crore profit. So my wealth increased from 12 crore to 15 crore. Clear now? So profit is always for a period, for a period. Balance sheet is always as on a date. I hope I have made you explain with as much detail as I could. Okay, clear, everyone? Those who were confused. Okay. So when we talk about profit and loss, I'll just introduce you the format of profit and loss. Profit and loss basically has two components. One is trading profit. What is trading profit? The business that you do. I do a business of selling phones. So by selling phones, how much profit I have made? I'm not talking about the marketing expenditure that I have done for selling. I'm not talking about basically the salary that I have incurred for employees to, basically, running my offices. So this is not I'm including. I'm only including the sales that I have done and the cost of sale, basically purchases or production cost. If I'm manufacturing company, I will have a production cost. So this basically generates me gross profit. And from gross profit, I basically deduct all other expenses, marketing, renting, electricity, which are not directly basically related to the generating of the basically selling of the phone. So this would basically ultimately give me profit and loss. And this profit and loss is for the period after considering all expenses. Okay, this is one part. Let me just show you profit and loss. Then we'll basically discuss other comprehensive income. Other comprehensive income is basically a way of, not including the income which should not be part of your profit and loss. Yeah, I'm explaining this. I'm right now only explaining profit and loss. I'm not explaining other comprehensive income. Don't worry. Profit and loss. I'm right now talking about profit and loss. Yeah, very good, Gautam. We take the total of profit and loss for the year and basically add it in the balance sheet. If you see in the previous slide, nobody asked this question, but this is what I try to show you. This capital is opening capital, basically representing the December 2023 wealth. Then this is the profit for the year. And these are things that we will be introducing later on. This basically made you the wealth of December 2024. Okay, ignore these two right now, but this is what we were doing. Opening basically wealth that we had it last year. This is the profit for the current year, and then we had the profit, basically the wealth of the as on date. Got it, Gautam? Otherwise, don't worry, we'll basically learn more accounting equations. The one equation we learned was the total asset is equal to total liability plus capital. We learn opening capital plus profit minus drawing is equal to closing capital. We'll learn more equations, don't worry. Okay, where were we? Yeah, SPL, profit and loss, profit and loss or SPL. Okay, statement of profit and loss or profit and loss. First of all, when we talk about a business, again, this is a T shape. Oh, sorry, it's a vertical. Vertical. First of all, what you will do, you will show some sales. Please understand, I'm also writing substitute words, so you should be familiar with them. Sales is also known as revenue. Revenue or sales. This is your primarily income. When you open a business, you open a business for the purpose of selling something, right? Let's say I'm right now, we have opened a business where we are providing you service of, teaching. So teaching will be our revenue. By providing you teachers, we charge fees from you. So this will be our revenue. Let's say you buy a phone from Apple. Apple is providing you phone. So they are doing sales, right? You buy clothes from, let's say, Zara, or let's say from Mintra, or any online shopping, or basically go to any retail. You buy the clothes. So clothes will be basically their sale. Let's say you go to a barber shop, barber basically cuts your hair or basically gives you a grooming treatment. So they are providing you service. So that treatment that they charge you fees will be their sales or revenue, right? Yeah, credit side, we will learn credit side, debit side. I'm not talking, I'm trying to, teach you in a way that you understand the business, not just debit credit. What is sale represents? The primary source of your income. What do you do as a business? Okay, Jhalak and everybody else. Yes. What sales represent? The primary source of your business, the business that you do. If you see any entity, let's say you open a financial statement of any entity, Tata, Reliance, any company, and you see their sales. So their sales will represent the main business they do, the purpose they have formed, the purpose they have started the company, the purpose they have started the, sole tradership. I have to open a shop. I am selling you multiple grocery items. So what I am doing? I am doing sales. My main business is to sell you goods that I buy, right? This is sales. Second, if I'm making a sale, I must have purchased it, purchased the inventory, or must have produced it. So this is basically purchase, and for production, we say cost of goods. Basically, let's say I have sold 10 crores. I made a sale of 10 crore. So for 10 crore sale, what I would do, I would have purchased them. Okay. So the purchase would be, let's say, 6 crore. Cost of making goods, cost of goods sold, cost of sales. There are many terms, and these terms basically defined by the expenses. Let's say if I normally make purchases, this would be basically purchase only. If I am basically, including these selling charges, if I am including, let's say, the production charges, then it would be cost of goods sold or cost of sale. We'll learn. This basically represents my gross profit. Gross profit. Okay. This would come out to be 4 crore. I have not touched the closing inventory. I have not touched the inventory part right now. Though ideally what I should do, okay, let me just draw the complete chart. We'll discuss things, some things later. Sales. Okay, one thing I forgot, ABC Limited, sole trader, partnership, etc. For the period December 2024. Please understand, when I write this, it means that January to December 2024. Okay, from January 2024 to December 2024, I am basically preparing this profit and loss statement. Okay, SPL, statement of profit and loss of ABC Limited sole trader partnership for the period as this date. So first of all, we'll basically show the sales, let's say 10 crore. Then we'll do the purchases. If we have purchases, then we also need to include changes in inventory. What is changes in inventory? I'll not discuss this. This is a complicated thing. Opening, minus closing. Okay, otherwise we can have cost of goods sold. Okay, as I told you, business is what? Basically selling at high, or I'm basically buying at less. So for 10 crore sale, the material that we sold, we basically bought it at 6 crore. So this will represent the gross profit. Gross profit or trading profit, right? And then we will introduce the other expenses, which are not basically directly attributable to business. What are the other expenses? Let's say, oh, one thing I forgot. After gross profit, there can be other income. As I told you, sales is your primary source of income. Primary source of income. Okay, the business that you do. There can be other income as well. Like, Dia mentioned advertisement. Sometimes as an organization, you can have other income. Let's say interest income. You have made an FD, interest income. Accrued is something else. Accrued is something else. It can be interest income. I'm not saying that this interest income is based on cash. Is income interest income can be accrued. Commission received, advertisement. So you get the point. Please understand, this is not primary. This is secondary. This is secondary source. You do not do business for this, though you are earning from it. That's a good thing, but you do not do business for this. You do business for this sales. You don't do business for this. Clear? Other income is not your primary source. You don't start business so that you will advertise, you'll receive commission. Maybe your main business is commission, then it will be sales. Otherwise, if your main business of selling goods, providing services, in that case you will not include other income. Other income is something that you do not do business but you earn anyway. Very good, Sajita. Wages, no, this royalty is a good example. Wages is expense. Ankit, what was your question? Advertisement income. What do you do? Let's say Ankit, let me show you. You have a property business. Okay, you are earning a rental income. Rental income will be your revenue. Rental income will be your revenue. Okay, Ankit. But because you have a large property, so you also earn from advertisement. You basically ask companies that if they provide you advertise, you'll show their board and they have to pay you advertisement income. But this is not your primary source. Okay, Ankit. Okay, clear? So what is your primary source will be sales. What is not your primary source will be other income. Let's say this other income is 1 crore. Okay, just see the comparison. Your primary source is basically generating the most money and your other income is very trivial. It can, let's say it's 50 lakhs. It's not even 1 crore. It will always be trivial. If your other income exceeds your sales, then what you are doing? Either you are not doing the business or you are incorrectly reporting other income as, as your primary source as other income. Clear? So this is basically your other income. Now, after this, what we will do, we'll basically make the total income. Total income. This will be your total income. Okay, let's say 4.5 crore. Now, what workflows? I'm talking about income. I'm not including expenses wish right now. Let's talk about the expenses. Workforce is basically your employees and you basically pay them salary. So salary is an expense. Now let's include the other income, basically expenses. What can be expenses? Let's say administration expenses. Administration expenses. What is administration expenses? Let's say electricity bill, salary, wages. Now I can see the answers coming. Salary, wages, commission paid. Okay, Jhalak, you're saying factory expenses. Just to let you know, factory expenses can be part of cost of goods sold. If Factory expense, factory where you produce goods, anything that is related to selling of the good, then in that case this will be coming here. What I am basically including, let's say salary or wages, these are basically, let's say for administration. Let's say any employee, any labor is basically in basically producing goods, then we would pay them wages. So these wages on automatically comes in cost of goods sold, which we will learn, don't worry. We will learn that wages, factory expenses, all this come in cost of goods sold. Okay. What comes under administration, that is basically, let's say we have a head office. So to run the head office, we have salary, wages, we have basically I should not say wages, I should say only salary, because wages come over here. So let's say we have a finance department, we have IT department, these are not in production, so these department basically incur cost, so they, we are paying salary, we are paying electricity, we are paying rent. Okay. Ankit, what was your question? No, 4.5 is not gross profit. 4.5 is total income. 4 crore is gross profit, Ankit. 4 crore is gross profit. 4.5 crore is basically the total income. We will learn Jivika, carriage inward, carriage outward. This is a very, different term. Yeah, Jhalak, this is indirect expenses. Where will carriage inward, carriage outward in trading PNL? Yeah, trading and PNL. If you just want to know where carriage in, carriage inward would go, that is basically transportation of goods expenses. And this is related to selling. So that's why it will be cost of goods sold. I'm discussing profit and loss and I have to discuss these components. These components require separate section. Sir, is my question is, are we doing cost sheet? No, Ritika, we are not doing cost sheet. I'm just telling you the statement of profit and loss. Though this is similar. See, cost sheet and statement and profit and loss are very similar, Ritika. The difference is SPL is for historical information. SPL is for historical. As I told you, financial information is for historic purpose. Okay. Administration expenses. Now coming back here. Expenses, administration expenses. So I have included electricity, salary, commission, rent. What else? Repairs, repair expenses. Let's say any discount given, or let's say loan interest. Oh, I should basically added this finance expenses. Yeah, financial accounting is for historical information. What has occurred, you are recording that. Okay. Discount expense is basically allowances. Okay. This would basically make out to be your net profit. Okay. Let's say we have 4.5 crore. So let's make it electricity 50 lakhs, salary, let's say 1 crore. Yeah, miscellaneous expenses, you can include miscellaneous expenses. I have not included depreciation. I have not included many things. I have not included many things. Depreciation, administration, finance expenses, salary, wages, expenses. Like major heads are this. Major heads are this. If I talk about major heads of expenses, just for expenses, these are major heads. Okay. Let's say major head is basically finance cost. Finance cost basically include your interest expenses, bank charges. Okay. Second is basically your salary and wages. Okay. This basically includes the employee salary. Okay. Then basically depreciation and amortization. I'm not going to discuss what is amortization and what is depreciation. Basically non-cash expense, just to let you know, non-cash expense. Then administration expenses. No, I'm discussing major head expenses, major head. Whatever expenses you have said na, rent, electricity, okay, basically discount, disallowance, This would be coming under these heads. Okay, so these are major heads. Very good, Jalak. You know that depreciation is decline in the value of depreciation is decline in the value of tangible assets. Amortization is basically decline in the value of intangible assets. I'm glad that you are aware. Okay, now you will have a profit. I should, if we are discussing this, so let's discuss this in a moment. Okay, I'll do is continuing with the total income. 4.5 crore. 4.5 crore basically 0.5 crore as other income, 4 crore as gross profit. I hope you remember. I should write it in better writing. Okay. Expenses head I have discussed with you. All the expenses head: finance cost, administration expenses, depreciation and amortization. Okay. And then finally, the finance, administration, depreciation. What else was there? Salary, wages. Okay. After including this head, let's say this total comes out to be 2.5 crore. So you will have a profit. You will have a profit before tax. Then there is something called tax. Can anyone explain me what is tax? Tax expense, let's say 20%. And then profit after tax. 20% to 2.4 crore. Tell me what is tax? A very, very important component. And even a separate subject, taxation. A separate subject, taxation, as part of your ACCA course. 1.6 crore. This is your profit. Tax we need to pay on profit, says Dia. Good answer. But who? Who do we pay tax? The compulsory payment made to the government. Very good answer, Shreya. Government tax. Okay. So as you know, just to give you an understanding, we, the people, companies, businesses, we use the infrastructure of a country. Okay. So to maintain this infrastructure, to keep things going, the electricity we get, the waters we get, the roads we get, the administration, the law and order we get, we need to pay taxes. We need to pay taxes to government. Government earns revenue in form of taxes. Government revenue is taxes. So government earn this revenue as taxes and they spend on this infrastructure so that we can continue utilizing this. We are using internet. Internet is basically based on satellite. The satellite is not owned by somebody. That is of government. Government provides this satellite to users. So to continue maintaining, running and maintaining these things, government basically need to expand, and to incur the expenditure they need revenue. So taxes is something we pay. So whenever you incur a profit, you receive some, you need to pay, sorry, I'm saying paying. Whenever you basically earn a profit, you need to pay a portion to government, and this is called tax. Clear? And now this money, that is profit after tax, belongs to the owners or shareholders. Okay. And this is the money that comes in your balance sheet. Okay. This profit we were talking about. This profit we were. In that case, we don't take money from government. Very good question, Ankit. If we had incurred loss, then in this case, whether we receive anything from government, no. When we incur profit, when we, sorry, we have earned the profit, in that case we pay a share to the government. But when we have a loss, so government says, okay, we are not going to pay you, but you can utilize this loss in the next year. How? We will learn. So when we have a profit, this is after tax. This is after tax. Okay. So this is an after tax profit. And once we basically have earned a profit, we need to share. Good question by Ankit, that if let's say we have incurred a loss, so what would happen? Do we get any benefit from the government? Because we are paying a payment to the government in case we are earning. What if when we incur a loss? So government says that you can carry forward this loss. In any year you have a profit, you can offset it and reduce your basically profit level. Should I discuss this? I think this is sufficient. Should we discuss text here, or it would be too much? Because I don't want to overburden you with so much information. I can discuss this, but the problem is I don't want to. No, no. When we have laws, we don't have to pay taxes. We don't. Government is not that bad that it takes money from you even if you have loss. Ideally, if you see, 2 crore is a positive number. 2 crore is a positive number. If it is a positive number, in that case, government basically takes away the money. So with the same logic, if it is a loss number, basically a negative number, in that case, government would be paying us. But no, government doesn't pay us, and government doesn't take obviously tax from us. Yeah, yeah, we will learn. We will learn. If should we discuss tax here, or should we discuss when it is about to come? I'm ready to discuss, but the problem is I don't want to overburden you with the information. I think this would be too much. Yeah, yeah, available, Ankit. Yeah, yeah, discuss later. Savrit saying such statement of profit loss include indirect expenses and income. See, Savrit, the thing is when we prepare the statement of profit and loss, a good question. When we prepare the statement of profit and loss, the the financial information, the financial statement doesn't say direct indirect. Financial statement doesn't say direct indirect. It says what you have gross profit, what you have net profit. Though you can see the structuring happening in a sense of direct and indirect, that we have a trading profit, this represents a direct business. Then we have basically net profit, this represents the basically including the indirect profits, right? This is how it represents, but financial statement doesn't say direct and indirect. It says gross profit and net profit. We have to understand gross profit basically represents the trading profit. The net profit represents everything else also. Everything. Let's say, let me just tell you an example. Let's say business made a sale of 5 crore and they incurred basically expenditure. Their purchase was 6 crore. They made a 1 crore loss. They made a 1 crore loss. Clearly, basically business paid more and earned less. This was basically clear case. Business incurred a loss. And what happened later? Business in other income, or let's say if I show you, this would be the gross profit, gross loss. This would be the gross loss. Let's say by some means government offered a lottery to the company. Though it is a very hypothetical thing, not a real thing, government offered a lottery to the company and they made a significant profit of 10 crore. Now, if I look at the net profit of the company, the net profit of the company would say 9 crore because of the 1 crore loss of gross loss in the trading account and basically the 10 crore of government lottery. So the net profit would show the 9 crore. Now, if I am a user, I would see, oh, company's profit have increased because company is 9 crore. Last year, company made a profit of 2 crore and now company is making 9 crore. What a good business. But no, it's not. If you look at it, if you look at the business, it made a loss. The business suffered, but company made a profit. How? Because there was some unusual thing. So when we talk about net profit includes everything else. But when we talk about trading profit or gross profit or gross loss, it basically includes only business income, business basically loss. Clear, Savrit? Yes, Ritika, what I'm saying is this is your trading, your business. Trading is what? Your business loss or business income. This is your business loss or business income. This is your overall net profit. Whether you earn from business, whether you earn from other sources. This was other income. This was other income. This was other income. And this was extraordinary thing. This was not normal day-to-day business thing. So your profit showed, spiked. Your profit was very high. But this was not due to business. This was due to something that was not in your control. Government offered you a lottery. It was not something that you do in a business, right, Ritika? So that is why your net profit was high, irrespective your business made a loss. So it is not representing a true picture. Yeah, it's a non-permanent source. Very good, Sharvi. Clear? So this is your statement of profit and loss. Let's understand the other comprehensive income. Now, before we understand, should we take a break for 5 minutes? Today we will have, oh, okay, we are already at 12:30. So we'll have a 10 minutes break. Yes. Okay. We'll understand the other income, other comprehensive income, then we'll move on to cash flow statement. And I hope we are able to understand. I hope my pacing is good. Everything is, you are making sense of it, right? Okay. Okay. Thank you. Thank you. So let's take a 10 minutes break. Let's meet at 12:32, and then we'll basically discuss the cash flow statement and changes on equity. Okay. Okay. Yeah, this is 3-hour class. This is a 3-hour class. Yesterday we had a 2-hour class as an introduction. Now we will have a 3-hour class. Okay. See you after break. 10 minutes break, guys. Are we back, guys? So there a message shared for the class? I received message at 11 a.m. that the time. Janvi, if you are in FA group, then it shouldn't have been an issue. In the FA group, the message was already there. So I'm not sure. I think I saw that some of the students have shared the message in the BT group. So I'm not sure whether it was supposed to be shared. So please, basically, you should have, I hope you are registered for the FA batch. If you are registered for the FA batch, then it is already there in the FA group. Right, Janvi? So if you are in the FA group and you have not received the link, then do let me know. It was shared yesterday itself. Okay, for every student who are right now part of this, don't worry, you can enjoy the rest of the class. Okay. So those who are in the class, let's say this is your second class. First class was demo class. Second class is also, you can take the demo class if you are already in. From next class onwards, definitely you need to register. This link, the first link was just to was shared to give you a demo. So after this, if you are not registered, you need to register for FA. Only then you will be able to attend the rest of the syllabus, because the link is shared in the FA group. Okay, no worries. That you can basically coordinate with your counselor, Janvi, and rest of the students as well. Whether you can attend these sessions or not, you can basically coordinate with your counselor. The recording will always be available to you, so don't worry. You can watch the recording lecture in case you face any challenge. Okay, guys? Okay. So I can see many students in the BT and law group are asking for the link, and I was confused like why these guys are asking. So then I realized that this link, the first class link, was shared with everybody just to give them a demo. Okay, any student who wants to basically get a link of the class, they need to add themselves in the FA group. And for that, you need to register for the FA group. Okay, just let your counselor know. Whoever have approached you, just let your counselor know. Okay. So what we were discussing, we have discussed statement and profit and loss. Now I hope this all since makes sense. That summarize a financial performance in terms of profit and loss. There is a trading account. There is a profit and loss for all other income and expenditure. Shows profit and loss for the period after considering all expenses. So this statement and profit and loss is clear. We'll discuss the other comprehensive income now. You will get the recording at the link provided by your counselor or the admin of the FA group. You basically recordings are available like by Wednesday or Thursday max. Okay, by Wednesday I think you will be getting the recording. It's not like you will be getting recording tomorrow. For every class that happens on Saturday Sunday, recording is available max by Thursday. Okay, if you are already a student with like other subjects, so you might already be aware. In case this is your first subject, then this is basically what happens, that the group that you are added in, you are shared the link and you are also given the login ID. Okay, you can use those login ID, log in into your portal and basically watch the recording. You can take the help of your counselor or any of your fellow student. Okay, Damandeep, was your query okay? Okay, now let's discuss the other comprehensive income. No, it's not. Ankit, Zoom link changes every class, and the reason is very obvious, so that the previous link is not misused. Arshpreet, then again, please everybody who did not get the link or who are not added in the FA group, contact your counselor, ask them to get yourself registered in the FA. Okay. These supposed to be handled by the basically counselors, but don't worry, I'm happy with this as long as we are not taking much time here. In the WhatsApp, in my personal number, you can contact me and let me know what is your query. I'll direct you to the correct person. Okay, I cannot spend much time on this in the class, right? So let's discuss the other comprehensive income. Now, if you see, everyone, please pay attention now. Any query related to financial information or batch or classes query solved. If okay, can we move ahead now? Everyone, please pay attention. Other comprehensive income, if you see, other comprehensive income is basically as you say, that this is said that you can either create a single statement of profit and loss and other comprehensive income, or you can create SPL separately and then OCI. What is OCI? What is other comprehensive income? See, other comprehensive income is just is just an attempt to give user a better understanding, a better understanding. Just like our example, where we have made a trading loss, and we had a net profit. See, net profit of 9 crore or 1 crore loss. Don't you think these two give two different images? If I know that company has made a 9 crore profit, I would be eager to buy the share of that company, to invest in that company. But if I know that company has made a 1 crore business loss, then I would be reluctant. Just these two different informations provide me two different pictures. Yes or no? Tell me. Hello. Yes. So similarly, there is other comprehensive income. The attempt earlier, what used to happen, that this other comprehensive income was not reported separately. This other comprehensive income was part of net profit, but this was creating a misleading picture. Let me tell you how. Let's take a real life example. How many of you know about Reliance? Anyone who doesn't know? Because this is a very famous case. Like back in 2000 or 2002, this you can check the date yourself, that this was a case between Mr. Mukesh Ambani and Mr. Anil Ambani. These are two brothers of Ambani group. And what happened, that Reliance group was split. Some businesses were given to Mr. Mukesh Ambani and some businesses were given to Mr. Anil Ambani. Dia, are you not aware about a Reliance Group? I'm asking any student who's not aware about Reliance Group, any foreign student. Reliance Industries is one of the biggest company in India and one of the biggest company in Asia. Mr. Mukesh Ambani comes under the top richest person. Like I'm not sure the number he is in right now, but he comes under top 20 rich person over the world. If I'm correct, you can check yourself. But he is one of the biggest deal in India and as well as in Asia, and also is recognized across the globe. Okay. So what happened in 2002? Mr. Mukesh Ambani and Mr. Anil Ambani, they split Reliance. Okay, because these brothers have different view. Mr. Anil Ambani had a different view, and Mr. Mukesh Ambani had a different view. So what happened? Let's say if I talk about Mr. Mukesh Ambani business, if I only focus on Reliance, Mr. Mukesh Ambani business, let's say Mr. Mukesh Ambani had this, profit and loss. Okay, where there was sales or revenue. Okay, I would stop using the sale word. I would start using more revenue word. Okay, I will start writing it in the bracket. I will start, over the time remove this so that you become familiar. So his revenue from business was, let's say, 10 crore, though let's say 10,000 crore. Doesn't sound 10 crore, right, to Mr. Mukesh Ambani. 10,000 crore. Okay, his cost of sale or purchase cost was, let's say, 6,000 crore. So his gross profit was 4,000 crore. Now, because of the split, you will learn later that assets that company own gets revalued. What is revalued? Let's say I own a property. Okay. I own this property. Let's say I bought this property at 1 lakh rupees. 1 lakh rupees. Okay. I bought this property at 1 lakh rupees in 1980. Now this property is worth of 15 crore. The property that I bought at 1 lakh is worth right now, their market value of this property is right now 15 crore, because property price increases. The property that my grandparent actually bought now is basically worth of 15 crore. Now if I look at the balance sheet in the non-current asset, this land or this property would still be reflecting 1 lakh. This land or this basically balance sheet, basically this land would still be looking at the 1 lakh, irrespective of its market value. And this is again the problem of financial information or financial statement, that they are historic. They don't represent the current picture, they represent the historic picture. So you can see the land is currently coming at 1 lakh, but the land has increased by 1 lakh, by basically let's say 14 crore 99 lakh, right? The land value has increased by 14 crore 99 lakh, but currently is showing in the balance sheet as 1 lakh. So just like this, let's say Mr. Mukesh Ambani, he has this, property in his balance sheet of 1 crore, let's say 1 crore. Now this property had a market value, let's say 6,000 crore. Okay, Ritika, thanks for the information. Mr. Mukesh Ambani is the ninth richest person in the world with $110 revenue. Okay, thanks for the information. I knew some student would come up with this. Okay, thanks for informing. So coming back to the concept, please everyone. So this property that Mr. Mukesh Ambani owns currently in their balance sheet is coming at a historical value, which is 1 crore. The 1 crore that they paid, let's say in 1950, they bought this, or not 1950, let's say 1990. They bought this at 1 crore. But now this property has a value of 6,000 crore. So what happens whenever a business gets split? Whatever assets you have gets revalued, gets basically at their market value, or also known as fair value. Now suddenly what you will see, that this balance sheet which was earlier reported at 1 crore, now it will be reported at 6,000 crore. So land would have the 6,000 crore. As we know, as of the accounting equation, total asset is equal to total liability plus total equity. Now there is 5,999 crore here. Now where this will go? This is non-current assets in the asset side. Okay, in the asset side. Now in the liability and equity side, equity and liability side, we need to show this 5,999 crore correspondingly. Can anyone tell me where we will show? Capital, liability. Where we will show this? Anyone? I hope you have understood the case. This property was coming at 1 crore at historical cost. Company got split. This is me telling you that whenever company gets split, company merges, the assets needs to be reported at market value or fair value. Okay. Very good, Sajita. Very good, Savrit. Very good, Gautam. So this would be basically reporting here in the capital. So land increased by basically 6,000 crore and capital increased by 1,000 crore. How? Let me tell you. Let me tell you. If I just, I showed you one accounting equation. Asset basically increase due to, let's say, the capital increase, profit increase. Okay. Or liability reduced. Or liability reduced. We will learn in chapter number 2. We'll discuss this in detail. Liability reduced. So what happens here? What happens here? If I, draw this basically this is a gain which is basically related to revaluation. This gain is related to revaluation. When we will be creating profit and loss statement of Mr. Mukesh Ambani, like we were discussing here, that his revenue was 10,000 crore. His cost of goods sold was 6,000 crore. His gross profit was basically 4,000 crore. Now you will see that there will be a line revaluation gain of this 5,999 crore, and this would basically make the profit 9,099 crore. Okay, and this is where it goes to capital. I hope now it is making sense that this profit basically goes into the profit for the year, and that is why this is going in the capital. Making sense now? Anyone? Any doubt? First of all, tell me this 9,000 crore going into capital. Any doubt? Why the corresponding leg was there? Because we made it into the profit and loss, and profit and loss got into the capital, right? So if you look at this, now coming back here, if you look at this, don't you think if I look at the profit of Mr. Mukesh Ambani, this would be misleading? This would be misleading because I would see, wow, 9,999 crore loss, basically profit. But actually their business profit is only 4,000 crore. And interestingly, this revaluation gain is not realized. This is not realized. Just think about it. Just think about it. You earlier had a property. Now suddenly somebody, you just, prepared your balance sheet differently. Now suddenly you prepared your balance sheet differently. Suddenly you have this 5,900 gain, 5,999 crore gain. Does it make sense that one day you have not done anything? Your business has not improved. You have not sold your assets. Your assets is still owned to you. But suddenly your business is showing a 5,900 crore worth of, profit. Earlier, let's say I'm not reporting it to the market value. I still own this 15 crore rupees of, property. I still own this, 6,000 crore of property. What it means that if I'm not showing in my books. So suddenly I'm just overstating my books. I'm just overstating my profits, my assets. This is called revaluation gain, because revaluation gain has this problem that it is not realized unless this land is sold. This gain will not be realized. Why? Because once you sell this land, the money that comes in your bank, then only you will realize. So the problem here is that this is actually not correct to include such a gain in this SPL. And that is why we have included in OCI that, okay, whatever fair value gain what? That due to change in market value, fair value gain or loss, whatever come there, this is not related to business. This is basically something market demand and supply thing happening, and you're not doing anything here. Okay, it is not related to business management decision. This is not related to business management decision. Please repeat, listen me. This is not related to business management decision. How much your property is increasing is not a management decision, is not showing management basically management business sense. Okay, this is only a increase and decrease in fair value, and you have not realized it. Once you have sold, then only show it in your profit and loss. But Mr. Mukesh Ambani will always be interested in showing this gain. They will be showing interested in showing this gain because they want to increase the profitability of their company. So in this case, the answer was, let's create a two statement. Let's create a two statement. One is SPL with your regular sales, cost, expenses, basically making it net profit. And then another one is OCI, other comprehensive income. Okay, this OCI would basically represent your revaluation gain or loss, either from property, either from shares, either from any other, let's say foreign exchange gain. What these are, we will learn. Don't worry. I will teach you. This is the next part. This is the next part. So this OCI, revaluation gain or loss, this revaluation gain or loss will basically make it. First statement would be SPL, second statement would be OCI. Now if you want, you can combine a one single statement, first of all showing the SPL, then basically showing the OCI, or you can create a two different statement, first create an SPL, then create an OCI. Okay, so you have this option. Either create a single statement, either create two statement. If you create a single statement, this will be called SPL OCI. If you create two different statement, one is called SPL, one is called other comprehensive income. Clear, everyone? Yes, yes, yes. Anything that is not realized, that is related to fair value gain or loss, will come under the OCI. Clear, Jivika? If windfall gain is basically realized, in that case, it will not come OCI, it will come under the SPL. Surplus will go. What is surplus will? For your syllabus, for the sake of simplicity, you have been given only one item, revaluation gain or loss. Okay. Anything related to fair value, you have been given fair value. Surplus, OCI surplus. Very good question. If you're asking for OCI surplus. Now, coming here. See, I am spending time here because it is important. Okay. Don't feel like why I'm repeating same thing. We have SPL. Okay. We have profit here. We have OCI. Okay. Let's say we have gain here. All these two goes to the equity. All these two goes to the equity. So if I draw equity share capital again in balance sheet, we have capital, equity. So we have opening capital. We have profit for the year coming from SPL. We have OCI, gain or loss, coming from other comprehensive income. Then again, we have this, drawings, or basically the capital introduced. And finally, we have capital at end. Anyone with any doubt of this? These things will continue expanding. I'm, telling you information, what is needed for you right now. Clear, everybody? Diya, your doubt is clear about the surplus? Yes. Okay. So this is with this, we are through with our SPL. Okay. I hope now it all makes sense to you when you read it that, okay, what is SPL? Statement of profit and loss and other comprehensive income. Includes item of income and expenses not recognized in profit and loss. What items not recognized? Fair value gain or loss. Fair value gain or loss not realized. Not realized. We'll understand this realized, non-realized part later on. But for the time being, I hope you understand that realized or not realized means that the fair value have changed, but we have not sold the asset. And similarly, can same thing happen for liability? But let's not complicate here. Okay. Now let's quickly cover these two statements. Statement of cash flow. Now let me be very clear with you what is statement of cash flow and what it does. Just to tell you business sense. Mm. Ankit, I'm not teaching you from any book. I'm right now teaching it from my own notes. So that is why you might be finding it hard from reading your book. Once I will have the books, I will be telling you, okay, you can go on this page. Okay. Right now, what I'm teaching you, just use this only. Okay. Focus here. I know it might be hard to, refer the book, but right now just focus on the notes I am representing. This is my notes. That's why you may not be finding it aligning in your books. Okay, Ankit. Right now, this is my notes. Statement of cash flow. Now, cash flow basically is a statement showing movement of cash in a business. This a statement basically helps user to understand from where business has generated cash. Cash is king. Cash is king. No matter how much profit you have, no matter how much profit you have, whether you have a very high profit, you can still go bankrupt. You can still go bankrupt if you have very low liquidity or you have very low level of cash. How? Let me tell you one example. This is a real life example, and this is what happened during 2008 financial crisis. Okay. If I look at the balance sheet of Lehman Brothers. So you could see that, and their profit and loss as well, and their profit and loss. You could see they were making profits, but these profits were not cash profits, We will learn that when we make a profit, this includes non-cash item. Like one of the thing in the profit is depreciation. It is a non-cash item. In case you are not aware about the depreciation, no worries. Let's talk about electricity. Not paid, but incurred. Electricity bill, we get monthly electricity bill, but as per the accounting concept, you're supposed to book electricity expense, but even if you have paid or not. Similarly, salary expense. Let's say you have not paid the wages to your workers. Even whether you have not paid them, you have incurred the salary expense. So you are supposed to book them. And similarly for revenue, let's say you have made sales on credit. Sales on credit. You have made sales on credit. So let's say you have provided a credit to a person and basically you have made sales. So you will be showing them as your sales. Your income will be increasing, but you have not collected cash yet. So if a business, let's say, instead of layman rather, let's talk about Satyam business. If you look at the balance sheet of Satyam business, you would see that they had lot of property. They had, thousands of crores of property. thousands of crores of property. Like it was something, let's say 5,000 crore. And you look at the equity. So equity was their capital, 5 crore. Basically, this entire amount is invested in the property. Just for the sake of example. Now you can see that company is basically earning rentals. Okay, but these rentals are yet to receive. They are earning rentals, so their income will be increasing, but they have not received the cash. The problem would this company would be how this company will be running. How this company will be running. Why? Because they need to pay electricity bill, they need to pay salary, they need to basically maintain the office, so repair and maintenance expenses will be there. You can basically take a temporary credit, but long term you need to pay cash. How would you manage? So if a business does not have cash, in that case the business will soon going to go bankrupt. So in many situations, you would be surprised to see balance sheet and P&L of companies where they have profits, but because they did not have cash, they went bankrupt because their cash is stuck in, let's say, non-realizable assets. Let's say property. Property is a very difficult thing. You invest your money in property, na? It's very liquid asset. What is a liquid asset? That it is very hard to realize. It takes years to sell the property, but you need the cash right now. So cash flow statement is something that helps you understand this. Okay, how much, basically, sorry, not how much, from where business is generating cash, whether from their operating activity, business, whether from investing activity, or whether from financing activity. Anything you have borrowed, loan, will be coming here. Let's say you have invested, you have bought plant and machinery. So cash will be going here. Cash going out, borrowed loan, cash coming in. Okay, so you have borrowed money and then you bought plant and machinery. Let's say you took a loan from the bank and you bought a building so that you can run business there. So money will be coming in from finance activity and money will be going out in investing activity. What does your operating business say? Let's say you have made a profit of 10 crore, but operating business only shows that you have received cash of 8 crore. So how much cash you have received from operating business is 8 crore. How much money you have paid in investing? Basically, let's say 5 crore. And how much loan you have taken? Let's say 6 crore. So if I show you from my business, I generated 8 crore cash. What is business? Basically my trading business. What my investing basically I buy things. So I have spent 5 crore money. And financing activity, I have borrowed money to buy this. So overall during the year, again this is for the period. Statement of cash loss is for the period, over a period. So during the year, what I made basically 9 crore cash. 9 crore cash. Now my opening cash was 1 crore, and after this my closing cash should be 10 crore. Let me just show you. Please bear with me. What it's saying in balance sheet, let's say in balance sheet, if I have cash of 10 crore, basically as on year end. So my cash flow statement would show, my cash flow statement for the period shows that during the year, from my business, from operating activity, I generated 8 crore of cash. From my from my investing activity, I spent 5 crore cash. And from my financing activity, I basically took 6 crore loan. Net during the year, I had received 9 crore cash. I have received 9 crore cash. And the cash at the opening year, at let's say this is this January to December period. So at the opening of January, I had 1 crore cash. So after the year end, the closing cash would be 10 crore. And this 10 crore would always match with your balance sheet 10 crore. This is how cash flow statement basically indicates. I am just explaining you what cash flow statement does. I'm not explaining you how cash flow statement is prepared. That is a separate chapter. Clear, everyone? Cash flow statement operating activity shows how much business, how much cash we have received from the business, how much money we have paid from basically buying the plant and machinery. Let's say we have sold the plant and machinery, we have sold our assets. In that case, how much cash we have realized. From financing activity, let's say we have borrowed the money, then basically how much money we have received as a loan, or let's say how much money we have paid. In case we are paying back the loan, in that case, how much money we have paid. Okay. So right now I'm taking a case where we have taken basically bought the asset and basically took the loan. So in this case, I received net 9 crore during the year. 1 crore was my opening cash and this would be my closing cash. The purpose of cash flow statement is to show the movement of the cash. Okay. Historical statement, just like the PNL and balance sheet, it's historical. Financial statement are always historical. It reflects the past cash movement. Okay. Operating activity shows how basically business, from where business is basically generating cash and how much basically it has spent. Cash flow is different basically because balance sheet is for a period, basically as on a date, cash flow is for a period. When you see the cash movement, okay, when you see the cash movement, this is for a period. And balance sheet only tells you how much assets you have. Balance sheet doesn't tell you, okay, from where these assets have been brought or from where basically how much cash has been circulated during the year. This is something, Gautam, you will realize once you understand the accrual accounting. Once you will see that non-cash expenses incurring in the profit and loss. Once you will see the balance sheet basically with many items with outstanding liabilities and trade receivable, money to collect. So balance sheet would show you, a healthy position, trade receivable, let's say outstanding bills. These would be coming assets and liability. So balance sheet would show you a picture that is, not representing how much cash it has, how much liquidity it has. So to show the liquidity, you would be reflecting at the cash flow statement, understanding where cash movement has come from, where the cash has gone, and where basically how much cash we holds. And this cash would also be reconciling with the balance sheet cash. You will understand it better once we introduce the accrual accounting, or basically the outstanding bills or non-cash expenses. Okay, Gautam? See, don't expect to learn cash flow statement in the class itself. We are just discussing them. We are not, learning them in detail. Okay. So just an example, ABC, basically, they have received cash receipt. They have paid during the year. Okay. So from operating activity, whatever cash for the business, basically from basically making sale, making payment to creditors, basically collecting from trade receivables, or basically from sale, or basically paid for purchases. So this will be coming under the operating activity. Operating activity. Whatever is related to business that you do basically for sale or purchase, that will be coming under the operating activity, including income taxes. If you have basically bought or sold asset, or basically let's say purchase, sale, in this case, this will be coming under the investing. So assets buying or selling will be coming here. Taking money, let's say money from loan, basically either taking loan money or paying loan money, would be coming under the finance activity. And then we would see the net increase or decrease. whether cash we have received in total basically has increased, or cash we have basically in total have basically decreased. Okay, and then we will have a cash and cash equivalent matching with our balance sheet cash. This may not make sense today, but trust me, after the syllabus it will make much more sense. That cash flow statement will always match with the balance sheet cash. Okay. Now, last topic of the chapter number 1, statement of changes in equity. No, I think stakeholder is there. Okay, if you want to understand, let me just help you. Let me just help you with, a couple of things. Operating activity. So, operating activity, let's say cash flow statement of ABC Limited for the period, let's say December 2024. I hope you understand, for the period means 12 months. Operating activity. So operating activity will have cash received from basically trading activity. Let's say from sales, cash received from sales, cash received from trade receivable, cash paid for purchases, cash paid for creditor. Okay, let's say wages paid to laborers. Okay, taxes, or oh, sorry, taxes last. Rent paid for factory. Okay, and taxes paid to government. This will show net cash flow from operating activity. Okay, just to let you know, this is a direct method. There is also an indirect method, okay, which comes from statement of profit and loss, because these cash received from sale, cash received basically from trade receivable, this information will not be in your profit and loss. So there is a method that you can basically get operating activity from your profit and loss. If you have a profit and loss, irrespective whether you have the information uh, for the cash paid or not, you can basically calculate the operating activity. But this is something we'll learn at the cash flow statement chapter. So in this is how you calculate the operating activity. All you can see, that's all the money that we are receiving or we are paying is basically for the business that we trade. Okay, the trading business. Now, if we are covering operating, let's also cover the investing and financing. Investing activity, basically purchase of land, plant and machinery, building, motor car. So any asset, okay, or I should say non-current asset. Okay, purchase of investment, okay, sale of asset, sale of land, building, plant and machinery, motor car, sale of investment. Okay, dividend income, important. Dividend income. Yeah, capex. Capex. Very good, Gautam. This is capex. Okay, dividend income, interest income. will also be coming here. Received, again, cash received. Dividend income, cash received. Interest income, cash received. This will be your investing activity. Now, financing activity. Yeah, rent received also. Right answer, Charvi. If Charvi, again, if rent is your other income, not primary source. If your rent received is primary income, then it would come here. Okay. If it's a primary source, then it will be coming under the operating. Otherwise, if it is your other income, then it will be coming here. Rent received. Okay. Now financing activity. Let's say financing activity, we have loan taken or borrowed money. Okay. Share capital introduced, basically owners. No, commission is here. Commission is here. If commission is related to business, if commission is related to other income, then commission would have come here. Okay. Loan taken, money borrowed from bank. Let's say you introduce your own money. Okay. Very good, Charvi and Savrit. Overdraft taken. Overdraft taken. Let's say dividend paid. No, trade payable, Ritika, will come here. Trade payable would come here. I've already told you. Trade payable, purchase, creditor is trade payable, na? Trade payable. It would come here. Trade payables are, you understand, just see the first word, trade payable. The liability is related to trade, not basically related to the financing. Okay. Yeah, interest expense here, Ankit. Interest expense paid. So all this will be coming in your financing activity. Now the net activity would look like this. Yeah, debentures. If I introduce Prakriti debentures, you have noted it correct. Just, oh, okay. One thing I have not included here. One thing. Just continue here. Just continue here. Payment of loan. Payment of loan, or Prakriti for you, redemption of debenture. Now, what is debenture? Please don't ask me right now. Just treat debenture as loan. Redemption of debenture. Now, what does redemption means? Redemption means repayment. So we are making payment back. No, proposed dividend is not here, Charvi. Dividend paid comes here. Dividend paid. Dividend paid comes here, not proposed dividend. What dividend we have paid will be coming here. Proposed dividend, something else. Okay. Oh, there are two slides. So we have basically paid any loan, or we have paid any capital back to the owners. In that case, this will also be coming here. This will be your financing activity. Now, finally, we will have the net of activity after making total. Let's say this is C, this is B, this is B, investing activity, and finally this is A. So if we add up all, we add up net cash movement. Net cash movement. Either cash will increase or decrease. So it will be A plus B plus C. Okay, this will be a net cash movement. Then you will add opening cash balance. And finally, you will have closing cash balance. And if you think about it now, you can just crack cash flow statement in a moment. What is cash flow statement? Yeah, this is indirect method, survey. What you are talking about is an indirect method. And net profit after tax. If you are, you have already proposed a dividend from net profit, then only you will be adding back. Okay, if you have basically not added, not reduced the proposed dividend, then you'll not do that. But yeah, I understand that you understand these things, but let me just introduce them for you. Okay, now if I just talk about a cash flow statement, you can crack cash flow statement in a moment. How? I have included multiple slides. Cash flow statement is nothing but cash account. Cash flow statement is nothing but a cash account. Opening cash balance, basically proceeds from sales. Okay, any loan taken. Okay, loan taken during the year. Share capital introduced. Let's say buy purchase account, basically paying for the purchases, or let's say for creditors, paying rent, or let's say electricity bill, everything that comes here, buying basically property, let's say land and equipment, anything, and then we have a closing balance. So you can see that the movement during the year, you have opening balance of cash you made basically during the movement, then you will have a closing balance. And this is what your cash flow statement is. It's just, categorizing them in investing activity, financing activity, and operating activity. Clear? Cash flow statement is nothing, just a cash account, just showing you the movement wise, basically activity wise. Making sense? In case you're not aware about cash account, don't worry. I was just trying to help those students who are already about the cash account. Cash flow statement is nothing, just a cash account showing the movement in category wise. Okay, everyone clear? Now, finally, let's go to the statement of changes in equity. Yes. Now, statement of changes in equity is nothing but your capital account. What capital account shows? It basically shows the capital introduced, capital, let's say opening balance, profit for the year, other comprehensive income for the year. Okay. We will understand, let's say this revaluation would be coming here. This retained earning would be coming here. Any share premium, share premium. What is share premium? Any money that you received on capital introduction, capital introduction. What this is, we'll learn later on. So this basically comes out to be your closing balance. Okay, it can also have the part where you will be paying back capital, basically drawings, or paying the dividend. So this will basically show the opening balance and basically closing balance, and whatever movement you have, profit, other comprehensive income, share premium account. What this share premium is, revaluation, I hope I have explained you. Share premium is something we will learn in your capital structure chapter. Capital structure chapter. Okay, share premium we will learn in capital structure chapter. I think this would be too much to introduce so many things in one single day. Okay, so statement of changes in equity, how does it look like? Basically, uh, opening, movement during the year, and closing. Okay, we will have share capital. We will have basically retained earning. Retained earning, in case anybody is not aware, it is your accumulated profit. Accumulated profit. Let's say profit of 2021, 2022, 2023. So you don't add it in the share capital. You keep share capital. Let's say you introduce the share capital with 10 crore. You don't add them. You just create a separate account, retained earning, whatever profit you have basically made. Let's say 10 crore, 5 crore, 6 crore. So all this will be basically becoming total 15, 21 crore. This 21 crore would not be basically looking separately. Then you have revaluation gain, OCI, whatever has come through the OCI. Okay, let's say it has, and this is again same. Let's say 2021, there was no gain, no fair value gain. 2022, there was suddenly 45 crore gain, and 2023, there was nothing. So this would come out to be total 55 crore. Nothing, basically these are the balances. These are the balances of profits. These are the balances of OCI. These are the balances of basically share capital. If capital was introduced during the year, let's say 5 crore capital was introduced, or let's say 2 crore capital was paid back. Let's say new profit came 5 crore. Let's say new fair value gain crore 6 crore, or let's say loss was made 2 crore. So let's take the example of loss. Let's say 3 crore loss was made. So in this case, now my retained earning would be 18 crore. And similarly, if there was a loss in revaluation gain, so let's say 2 crore. Now my basically OCI balance would be 43 crore. Share capital would be, let's say, 15 crore. If capital is introduced, paid back, then the balance would be, let's say, 8 crore. Making sense now? Everyone? Ankit, what is saving? Understand, just understand this thing. Retained earning is nothing. Just to clarify again, retained earning, yeah, I knew this question would come. Retained earning is nothing, but your profit of past years. Let's say I introduce my company in 2020. I introduce my company. So in this, I made a 5 crore profit. Okay, how would it look on the balance sheet? How it would look on the balance sheet? Share capital, let's say 10 crore. Profit for the year 2 crore. So my net capital would be 12 crore. Okay, let's also introduce OCI, 1 crore OCI, basically revaluation gain. So my net capital was 13 crore. Now in 2021, I made a profit of 10 crore and no movement in OCI. No movement in OCI. Nothing was, no gain was there. So what will happen? Share capital, let's say in 2021 of balance sheet, how would it look? Share capital would be 10 crore. Profit, or instead of profit, I should write retained earning. Retained earning previous year was 2 crore. Profit for the year was 10 crore. OCI balance was 1 crore. Now, retained earning basically past profit, profit for the year, current year profit, OCI, previous year profit. Okay, so this would now make total of 20, 22, 23 crore. Now, let's go for the 2023. Very good, Ritika, very good definition. Retained earning, any profit that is kept aside for future purpose. Okay, let me just show you 2023 as well. What will happen in 2023? Let's say this year we made a loss of 2 crore. We made a loss of 2 crore SPL. And in OCI, we again made a gain of 3 crore. How will the share capital look? Share capital would still be having a balance of 10 crore. Retained earning will be 12 crore. How this 12 crore arrived? Basically 2020 profit of 2 crore and 2021 profit of 10 crore. Now profit for the year, we have made basically loss. So 2 crore would basically reduce. Okay. Now retained earning new balance would be 10 crore. And OCI, earlier OCI balance was 1 crore. And during the year, we made a 3 crore profit. So OCI balance would be 4 crore. Okay. So now if I show you the statement of changes in equity, it would look like this. I'm just representing the vertically. Now make it vertically. Share capital, opening balance was 10 crore. Retained earning, opening balance was 12 crore. OCI, opening balance was 1 crore. Okay. Movement, no movement here. There was 2 crore, 2 crore loss. There was 3 crore gain. And suddenly share capital was 10 crore. The retained earning is 10 crore now. And OCI is 4 crore now. You can make it for any year. And if you again look at it, this is nothing, just your capital account. Clear, everyone? Retained earning is just a reserve. Okay, reserves of past profits. Ankit, clear? No, share capital here, you basically, if you make the total is 10, 10, 4, your total is 24 crore. Right, Gautam? 24 crore. This is your total equity. In your balance sheet, this total equity would be representing total assets, total assets, total capital or equity, and total liability. So this 24 crore would be your total equity. Okay, Gautam? I hope now these concepts are clear. Please, I strongly recommend you to do revise this within 24 hours. Do not wait for next week class. Oh, okay, okay, okay. Okay. I think this will be informed by you, VG team. So please don't wait for next class. Please revise them. Whatever concept we have learned, it is very important. Okay. All these basically elements of financial statement we have covered. Now we will be covering the components of the financial statement. Let's say what is non-current assets, what is current assets. Okay. Any doubt, anybody? We have covered this component: balance sheet, profit and loss, cash flow, changes in equity. Significant notes and disclosure you will learn over the period. Not at the knowledge level, but at the skill level. Significant notes and disclosure. You need to understand what is accounting standard, what is IFRS, and what disclosures and notes they require. Okay. Any doubt, anyone? I hope this was not exhausting to you. I hope you find it interesting. That's why I introduce breaks. So if you want, we can have a 5 minutes break, Jivika. We can have a 5 minutes break right now, and then we'll continue. I normally do 2 breaks. One is, after 1 hour, after 1 hour, so that students don't get exhausted. See, it's a professional course. Now the school days have gone. Now it's basically the time that you actually, start working, because in your office, you'll be working 8 hours, 8 to 9 hours. So it's something that you need to get it, share capital, yeah, shares is for shares. When we talk about share capital, the word starts with share. When we talk about partnership or sole trader, it will be capital, not share capital. Okay, Gautam? Share capital is for companies. Okay, 5 minutes break so that you get relaxed, and then whatever time we have left, we'll cover the stakeholder, and we'll wrap up the class. Okay, just a 5 minutes break. Yeah, shareholder are the people who own the company. I not talked about it because I'm just saving it for the stakeholder, which we are just discussing. Okay, and mainly we will discuss it in the capital structure chapter. Okay, Divyam? 5 minutes break, guys. Okay, Jivika? 5 minutes break so that it doesn't become exhausting. The idea is simple. Students, please note, you guys are becoming professional, so something is expected of you, and by working for 3 hours, by spending 3 hours in a class, you become habitual of working for long hours. This is something that as a professional you are expected to do. Okay, let's have a 5 minutes break. Yeah, definitely. Cash flow statement, what is taught in your 12th class, is same that is taught here. It's just that you will be learning more things here. Not at the knowledge level. I'm not sure how much they have given the cash flow statement in knowledge level, but definitely at your skill level, you will be learning thoroughly. IES 7. You'll learn the accounting standard 7, cash flow statement. It will be very detailed. It will ask you for disclosure and notes. I'm not touched disclosure and notes because it will be a very different chapter altogether. Okay, so let's have a 5 minutes break, guys. Yeah, share capital is called equity. Equity, to help you understand, equity is nothing but residual interest. Chapter number 2 coming, we'll discuss there. Okay, Savrit? I intentionally use these words: capital, equity, revenue, sales, so that you become familiar with these things. Okay, let's have a 5 minutes break. 5 minutes break, guys. Let's meet at 1:40, and then after for 20 minutes, we'll just wrap up the chapter. Are we back, guys? Yep. Okay. Nice. Stakeholder. So we understood about the what are the elements of financial statement. Now let's understand who do we prepare this financial statement for. Okay, we prepare this financial statement for stakeholders. Normally, let's say we are a sole trader, or we are a partnership, okay, or we are a company. Normally, we prepare the financial statement for people who have invested their money. Let's say the owner, a partner, okay, or shareholder in case of company. Shareholder is nothing, just basically the same person as the owner. Shareholder is just owner in case of a company. How this goes, basically, I think in the last class we did not discuss this, that company is a separate legal entity that we know. Now ABC Limited, let's say A Limited, A Limited basically can run business in its own name. It's a separate legal entity and it has limited liability. Okay. So now A Limited can basically run business in its own name, can own assets in its own name, own assets in its own name, take loan in its own name, so that tomorrow if bank comes for recovery of amount, so it can only use the assets of the A Limited and not Mr. A. Mr. A has invested the money, has invested the money. So in this case, Mr. A would be the shareholder. He has, let's say, 100% shares of the company. Okay. Basically shares represent the ownership. Let's say you have a house. Okay, a house has multiple rooms, so each room represents the ownership, so you can transfer the room to anybody else. So similarly, in case of a company, you can transfer these 100% shares to somebody, and in proportion you can transfer, let's say, 5% share, 10% share, 20% share, any percentage you want. Okay, so that is basically the flexibility, and in this case it will not affect A Limited. A Limited, since it's an artificial person, will basically continue to run its business. Mr. A, if he doesn't want to continue the business, he just need to transfer the share to, let's say, Mr. B or Mr. C. He can discontinue and A Limited will continue to exist. So the continuity of A Limited will basically be perpetual. What is perpetual? Infinite. That because, let's say, Mr. A dies, or let's say Mr. B comes up, take up his business, Mr. C also joins the business. Unlike partnership, unlike sole trader, the A Limited will continue. So this has a perpetual succession. Perpetual succession means that it will not close. It will not be closing the business unless you close the A Limited. Unless you close the A Limited. So if you don't close the A Limited, as long as A Limited will continue, irrespective of their owner, Mr. A can basically, if he dies, so in that case, A Limited will continue. Though A Limited will not be having any shareholder, but A Limited will continue. In that case, you need to basically do some formal regularities with Companies Act, as per Companies Act, and in this case A Limited will be continued from a process. It cannot be basically discontinued, or cannot basically be seized just because Mr. A died, or Mr. A transfer his shares to somebody, or Mr. A asks somebody to join as his shareholder, and you can transfer share in any number of ways. So far so good about company. That what are additional features? That it has perpetual succession. You can transfer any number of partners, any number of owners. Okay. Now one more thing. Since A Limited is an artificial person, and I can invest my money, so I can hire somebody to run this company for me. I can hire somebody to run this company for me. They will be running the company, and they will be called director. Okay, they will be the employee of the company, and I can use, basically I will be giving them money. See, hiring somebody else is always beneficial. Why? Because director is expert. They are MBA, they are Harvard University pass out, they are ACCA, basically expert in their field. So they can provide the best service. Whereas I'm just an individual with money. So I may have money, but I may not have the skill. So I can hire somebody. They will be employee. So this basically creates owner as shareholder and director as agent. So owner is basically the principal and director are the agent. Directors are just employee of the company, nothing more than that. So either I can hire somebody or I can myself appoint as a director. Mr. A can basically act as an owner, as a shareholder. Also, he can act as a director. Example, real life would be, let's say, Mr. Elon Musk, Mr. Mukesh Ambani. These are the people who hold the shares of their company, let's say Reliance Limited and basically Tesla and SpaceX. They hold the share of this company, so they are the owners. But at the same time, they are the directors of the company. They run the company. They are the CEO. Okay, so they are the directors of the company. So they are acting in two capacity: one as an employee of the company and one as a basically owner of the company. Okay, owners, the shareholder cannot run the business. Business of company will only be run by director. That is a different matter, that you can appoint yourself as a director. How directors are appointed? By shareholder. So whoever has the majority of 50%, they can appoint the director. So if you have more than 50% shares of the company, in that case, you can appoint yourself or you can appoint somebody else as your director, right? So another feature of company, that perpetual succession, that company can be run by a different person and that person will be called director. They will be the employee. As a shareholder, you can appoint somebody as an expert to run the company, or you can yourself basically run the company as a director. In that case, you will have two capacity: one as a shareholder, one as a director. Okay, as a director, you will always be employee of the company. As a shareholder, you will be basically the owner of the company. This much clear? Minimum number of directors in case of UK is two. Like for public private company it's one, and for public company it's two. Okay, Jivika, this is as per the Companies Act. In India we have different scenario. Okay, now coming back to this, why I explained this. Stakeholder. When we talk about stakeholder, there are multiple stakeholders. Okay, let's keep it. There are multiple stakeholders. Anyone who is affected by the business will be a stakeholder. They can be owner of the business, they can be employee of the business. So shareholder can be the stakeholder, and director of the company can be the stakeholder. How they are affected? See, if company does well, if company profit increases, shareholder wealth will increase, because these people have invested their money. So they have a very direct relation with the company. So whatever companies in performance improves, their shareholder value will increase. The shares they own, this will increase. Similarly for sole trader is also the business owner. So the money they have invested, it will, if it increases because of the profitability, they basically directly become the stakeholder. Okay. Partner is a direct stakeholder, because they have invested their money, they are running the businesses, so they have direct stake in the company. Shareholder, they have invested their money, though they are not running the company, They are basically shareholder, they have invested their money, so they have the interest. So if profitability of the company reduces, they will get affected. If profitability of company increases, they get affected. Employee, let's say director. Director are people who receive salary, who receive salary. So if company performance increase, so their salary will increase. If company performance reduces or company become bankrupt, they will lose their job, they will basically receive a less salary. So employees have direct, whether be a director or whether be a normal employee. If let's say I am an employee of my company, if my company goes bankrupt, touch wood, it doesn't happen. But if let's say hypothetically it happens, then my salary will be lost, my job will be lost. So as an employee, I'm directly interested, right? Okay. Now external stakeholder, let's say as an external stakeholder, so these two people would definitely want financial statement, look at the profitability, look at the liquidity of the company. Sorry, let's start talk about profitability of the company, that how much company is profitable, right? These two people. Stakeholder consists of multiple groups. Stakeholder consists of multiple groups. It consists owners, employees, customer, supplier. Shareholder is basically the owner of the company. They are not customer, they are not employee. Shareholder are the owners. Clear, Savrit? Shareholder is only one of the group of stakeholder. If I talk about it, basically stakeholder is a bigger umbrella. Stakeholder. If you break down this stake, what stake you have, what interest you have. So stakeholder as shareholder. Shareholder basically have the money invested. Employee, employee have their salary, job security, right? Let's talk about other stakeholder. Customer. Customer receive goods, quality, services from company. So they have their stake in the company as a customer. That whether company is providing them best quality services, best products, right? Satisfaction, right? Let's talk about it from business point of view. Let's say you have given an order, you have given advance to a supplier, a company who's basically preparing a ship for you. So if let's say company becomes bankrupt, your ship will not be delivered to you and you have given money to the company. Let's say you are constructing a plot for your building. Okay. You're constructing a flat, or let's say to live in, or let's say for your business, and the builder basically runs away with your money. So you are a customer, you are interested in the financial health of the company, right? Because if company is profitable, then it's less likely chance that company will commit a fraud or company will run away with the money. Yes or no? Similarly, supplier provide goods. Basically, these people buy and these people sell goods to the company. Okay, so mostly on credit. So supply is concerned. Let's say if I sell the goods to the company, what if they do not, make recover the money from me? Okay, but I'm not able to recover money from the company. I have sold, let's say, this has happened like in India. There was laptop distribution by a state government. Okay, laptop distribution was done in a state government. This was provided by SCL company. What happened actually, because it was a government, so SCL provided the laptop first, and then it basically went for recovering the payment from the government. What happened? Laptops had some fault. Laptops have some fault, so government declined the payment. So as a supplier, just think about it. As a supplier, you provided the goods, but at the time of receiving payment, you were declined. So when this will most likely happen, that company's financial position is deteriorating. Company does not have cash to pay. Company's profitability is reducing. So as a supplier, you are interested in the liquidity of the company, right? As a customer also, you are interested in the liquidity of the company and profitability. As a bank is also a stakeholder. Why? Because bank provides you loan. So bank want to see whether you are able to pay the interest and the loan amount back. So bank will be interested in basically the liquidity of the company. that how much company has cash, how much basically profitability company has. Okay, you can be a government as a stakeholder, because government collect taxes from the company. So what if company reports low level of profitability? We will learn that how books of accounts are manipulated. Sometimes companies show low level of profitability so to pay less tax. So in this case, government would be interested in checking the financial statement of the company, right? You can be a stakeholder, let's say a local authority, local people. How these people are affected? Let's say you are doing a construction project, and this construction project is hurting these people. How? Because you are cutting the jungles, and the animals and the local village people are getting affected because of that. So these people are protesting against you. These people are protesting against you. They are saying, why you are basically cutting the tree? Can you not do so? Company will claim, no, no, we will basically be at loss making then. So they are interested in basically looking at the financial statement of the company, whether company is actually profit making or not. If company is profit making, then why they are claiming such things, and why they are cutting trees? They can increase their cost and basically save the environment as well, because environment practice requires cost. But because companies claiming that they have less profitability, so they need to cut down these costs. So these local people would be interested in the profitability of the company, would be basically looking at the balance sheet, the financial position of the company. What is the position? Whether there is a large group, so they should be basically careful of the environment, because they can bear the expenses. Clear, everyone? So customer, supplier, government, shareholder, lenders, basically the bank. Auditor, let's keep it as is, because auditor is something that audit subject teaches you. Okay. Now I have discussed the stakeholder. I have discussed their need as well. What are the needs of the stakeholder? You can read it yourself and basically let me know in case you get it out. I have explained this. Basically, employee management would be interested. Okay, what is the profitability level? What we need to do more as an investor? Whether you want to basically invest in the company, whether company is so much risky. Okay, financial institution, how much loan we can give. Prospective investor, prospective investor is somebody who has not invested yet but planning to. Not invested yet, not yet invested but planning to. Whether we should buy the share of the company, whether we should invest in the business. Supplier, basically payment assurance. Customer, continuous supply of long term inventory. Government entity, resource allocation, taxation policies. General public media, local economic contribution. So everybody has different use of the same financial statement, and that is why we prepare financial statement for stakeholders. Though our primary stakeholder would be the investor and prospective investor, our primary stakeholder would be the shareholders, because shareholders are the one who ask basically the directors, who ask the directors to prepare financial statement. Yeah, Ankit, this is available. I'll just share it in the group. Just final concept and then we are through. One final concept. Because A Limited, now managed by the directors, and Mr. A is not participating in the business. It is director who make the decision. So Mr. A wants A Limited to prepare the financial statement, because he wants to know whether his investment is increasing or decreasing. So financial statement is a way the shareholder know about the health of the company, whether profitability is increasing or decreasing, because they are not participating in the directorship. Directors are employee of the company who run the company. Had it been a partnership or sole trader, then definitely they wouldn't need to ask for the financial statement. In partnership and sole trader, most person who would be interested would be bank or government as tax revenue. They would be interested in for the basically taxes. Government would be interested for taxes, bank would be interested for loan recovery. But for customer, supplier, they would be not much interested as compared to company. Why? Because partnership and sole trader don't do business at a large scale. Okay, they don't do business at a large scale. So no long-term contract are stuck for cash and customer and suppliers. So these are not very relevant stakeholder for partnership and sole trader, but for company, definitely company plays at a very large scale. That is why shareholder and other stakeholders are interested. Clear, everyone? So shareholder would definitely want to know the profitability of the company because the company is managed by the directors. Directors run the company, so they are supposed to prepare the financial statement. Okay. Any doubt? With this, we are through with our chapter number 1. I hope you have a better insight after reading chapter number 1. Please, my humble request, do revise this within 24 hours. Okay, if you can, try practice some questions from ACCA Study Hub if you have the access to ACCA Study Hub from chapter number 1, or you can basically try to do questions from your BPP or Kaplan study kit for the element of financial statement and stakeholder. Okay, try to see where the element of financial statement is and then try to do its question. Okay, otherwise let's meet at next class and then we will be basically discussing these things. Please do revise. I will again telling you, you will forget all these things if you don't revise. When you say company, is it multinational? Company can be national and international. That is, has nothing to do with being a company. So you mean that stakeholders include employee, customer, investor, etc., and shareholders include owner of the company. Shareholders are the owner of the company. Shareholders not does not include. Shareholders are the owner of the company. Like I told you, stakeholder is a big umbrella. Shareholder is part of the stakeholder. Okay, Savrit? It's in the WhatsApp group, Ankit. My contact number is in my WhatsApp group. You can basically reach out me there. I will share the slides in the group so you will know automatically. FA group, Ankit. If you're part of the BT group, then BT group. If you're part of the FA group, then FA group. I'll share the slides, you'll know. I'll share the slides, you'll know. Okay. Okay, Ji. So I hope you liked the lecture. I hope it was informative for you. And I hope that my pacing, my way of teaching was helpful. And it was not something that you things were getting above your head. I'll just ping. Okay. I'll just ping. Okay. So let's meet at our next class. Hopefully till the time you will be revising, you will be preparing. Let me know in case of any question. I'll just pin the slide. I'll just, pin and I'll just share the slides. I'll just confirm that this is me. Okay. Yes, Sharvi. So Sharvi, am I not pronouncing your name correctly? Oh, okay. Do let me know. Is Charvi or Sharvi? Okay, let's meet after the class. Let's meet after the class. You can just tell me directly. So apologies, my apologies. Okay. That basically VG team will tell you. When will be the next class? VG team will tell you. Basically, they have some plans, so they'll tell you. What was your question, sir? Do we write these slides in notebook? It's your call, Ankit. It's your call. You can create your own summary notes. You can refer my notes. You can read from book. That's up to you. That's something that I decide. I'll let you decide. Like, just treat me as a teacher. I'm just teaching you whether you want to basically make your notes, whether you just want to watch the class. Up to you, Ankit. Okay. Thank you, Savrit. Thank you. Okay. Yeah, please go on. I'm still here. Let me know your doubts. Yeah, definitely. We'll be introducing question papers. We'll not just introduce concepts, we'll also introduce questions. Ravi, as I said, it will be told by the VG team. You can contact VG team and they'll inform you. Though you just stay in the group, they'll inform you when is the next class. Okay. I cannot, make confirmation that it will be next week or after next week, and then basically class gets cancelled after that. Ankit, no, that will be confirmed. That will be confirmed by the VG team. They have some plans. That's why I'm saying they have some plans, so they will decide and let you know. Now, usually it should happen next week, but I'm not sure because they have informed me that there are some plans. So that is why I'm not commenting right now. Okay, let's see. If you are in the group, you will get these links. Let's now, because class is already off, so I'll let you if you ask. Yeah, if you want, I can basically unmute you, but okay, that will not be a problem. But because the class is over, so let's do it next time. Just raise your hand. I'll unmute you. Okay, Ankit, are we done? Okay, Ravi, you want to unmute yourself right now? Okay, go ahead, Ravi. Okay, I think Ravi left. Okay, no worries. Let's meet next class. Okay. So for this, for today, this is sign out. Bye bye.